Hi, welcome to Secure Real Estate Info for Homeowners. So today we're going to talk about the short sale tax implications. Now, this is one of the items that most realtors don't get into because generally we don't give tax advice or legal advice. But here is what I'm going to teach you what I know from what I've been told by CPAs, attorneys, etc. So I'm going to make it pretty basic so you understand and so that it's easy to follow. So basically we'll start with what is a short sale. So let's say you need to sell your home, you can't pay your mortgage payments, or you're just underwater. So your home is valued at less than what you owe. So that's a short sale. So in a short sale, you're selling your home, and because you're paying, or the sales price is less than what you owe, the bank forgives the rest of the debt. So the lender is taking a loss, your lender. So because the lender is taking a loss, for them to write it off of their accounting books, they have to show a gain for someone. So you, the seller, would be given a gain, a 1099, and it's actually a 1099-C, which is a tax form usually given if you've had extra income from a independent contractor type job, that sort of thing. But this is what happens. At the end of the year, you'll get a 1099-C because the lender needs to show that someone had a gain so they can show a loss on their accounting side of things. Now, there's a couple of options here. So you get a 1099, you don't have the money to pay income tax on that supposed income. It's phantom income, really. So there's a couple of things. If you are living there, if it was your primary residence for 2 out of the last 5 years, the Mortgage Forgiveness Debt Relief Act of 2007 should save you. It basically cancels the debt. It has to have been your principal residence, and they'll cancel up to $2. I'm going to switch screens here for a second. Perfect. So if you go to irs.gov and look up home foreclosure and debt cancellation, it talks about the Mortgage Forgiveness Debt Relief Act of 2007. So it allows you to cancel that debt. And if you want more information, you can go to that publication 4680. But basically what happens is there's one extra form that you need to fill out with your taxes. I would have a CPA do your taxes the year of the short sale just to make sure. And that form, hang on one second, should be cancellation of debt. So that's what you'll get. You'll get the form 1099-C. And there's one extra, so I guess if you go to this publication, the 4681, it'll tell you the form that you would need to fill out to get that canceled as income. So basically it just zeroes out. That is the goal anyways. And you always want to talk to your CPA, but this is, we do hundreds of short sales. This is pretty much what every CPA attorney has told me. Now, so that's if it's your primary residence. You can get that income canceled. Now, what if it's an investment property? So the Mortgage Forgiveness Act does not cancel that for you because it was an investment property. It wasn't your primary residence. So our suggestion is to look at your balance sheet. So if it was an investment property, look at what your property is worth and what you owe. Now, if you owe more than everything's worth, which in this real estate market is pretty easy to show, we generally would suggest you claim technical insolvency at the time of the short sale. So any income that would come in, that 1099 would automatically be void because you claimed technical insolvency, meaning you don't have any money, you can't pay those taxes, and your CPA can work on that technical insolvency. So we hope this has been helpful. We want to make sure that everyone doing a short sale knows the tax implications. They're making the best decision for them. Thanks so much.